Have you ever felt totally stuck trying to figure out support and resistance, wondering if you have it even remotely right? And it's very important because these levels can really make or break your trades. Today, I'm going to show you a straightforward way to mark off these levels with confidence so that way you can stop second guessing your trades and start making confident trading decisions. I've spent thousands of hours on the charts trying to get this right, and finally I have, and now I'm doing this so that way you don't have to spend thousands of hours trying to figure this out for yourself. Let's get into it. Just to keep things simple, if we think about support and resistance, we can kind of think of it kind of like a house where basically the support is trying to hold everything up, kind of like my hand is doing right here with this ball. And if we think of resistance, then we can think of it kind of like the roof or the ceiling, where basically price is trying to bounce up. It's stopping the ball from going higher, just like when you're looking at the market. Now, sometimes, of course, price will bust through that resistance with a lot of volume. And then on the opposite side, when it comes to support, of course, price is going to bust through that support and go even lower with a lot of volume. So now that we kind of have a sense of what support and resistance is, there is one main way that I find support and resistance on any given chart. And let's just take this chart right here as an example. This is an Apple chart, one of my favorite companies in the world. So if we take a look at, let's just go ahead and go to the weekly time frame. So the first thing that I do is I use the candle method of being able to plot out support and resistance zones. So let's take this candle right here. We have a bullish candle. And then the candle right next to it is a bearish candle. So typically when I see these two candles together, then to me, this forms a resistance. And I'm just going to put an R right there for resistance. And on the opposite side, when I see a candle that is a bearish candle, like this one here, and a bullish candle together, this to me represents a support. So we have our support here. And if we were to look at just this range right here, we can identify other support and resistance levels. So this area right here, we have our bullish candle and our bearish candle next to each other. These two form also a resistance. Oops. If I could draw an R. Okay, cool. And then we also have this area. It's a little bit tricky because we have this bullish candle and the next candle is a bearish candle. So this is a resistance, but it's a little bit trickier on this time frame. And we're going to talk about a little bit later on how we can use multiple time frames to refine these levels. But essentially, this is just giving you the idea. So now we have these resistances here. If we were to look at the bottom, like for instance, here we have a bearish candle and a bullish candle together. These two form a support. And right here, we have another support. We have our bearish candle next to our bullish candle, and then these are supports. Right there. Okay, cool. So now we've identified multiple supports. We've identified multiple resistances. And these supports and resistance help us find levels to trade from. So one thing you want to pay attention to when you're drawing off these resistances and these supports, we want to watch out for the highs and the lows. So let's make our charts a little bit cleaner here and remove all of these drawings. So highs and lows. So we can easily see right here, the first resistance that we drew was a high. And then the second high was here. And then the third high was here. If we're just looking at this range right here. And then on the flip side, we can clearly see where our lows are. So this candle right here has a low right there. And then this candle right here has a low right there. And then this candle right here has a low right there. And oh, look, this was also at the same place where we saw our supports. So when we see these highs and these lows inside of the market, we could basically just kind of draw a line connecting all of these things right here. And it gives us a very clear picture as to where our highs are, where our lows are, high, low, high, low. When we're trying to identify those levels on the charts, if we're looking at a downtrend, I'm just going to put D for down because that's what this little area is. It's a downtrend. We see a high, and then we have a low, and then we have a high, and then we have a low, a new low, high, low. So that's exactly what we're seeing right here in candle form. And the same will be true for the upside if we were looking at an uptrend. So this is a really solid uptrend right here. We see nothing but bullish candles. So if we look at this area right here where we have our support, we see price bounce up from the support. And then where does it end? It has made a new high inside of this market. And then also, look, we have a bullish candle and a bearish candle next together, and this forms what? A resistance. So this is pretty much a pattern that repeats itself over and over inside of the market. So one other thing to be aware of is that these support and resistance levels are not just on higher time frames, they're actually on all time frames. So if we went down to the daily time frame, and let's just make this a little bit better. So this is looking a little funny, but the thing that we drew on the higher time frame, we can see with a lot more detail how this is coming together. So we have our resistance area up here, and then we also have our support level right here, our resistance level, support level, resistance, support. So let me clear off all of these drawings just so that way it's a little bit easier to see. But basically, if we were to redraw it with a lot more detail, it would basically look the same. So this was our resistance here. And then down here was our support. Even though we do have our bearish candle next to a bullish candle, this was a gap inside of the market, but we can see with a lot more detail, this is still the low here, and this is still our support. So right up here, we do have our bullish and our bearish candle following each other, and we do see that this was the lower high of the zone, or at least inside of this market on this time frame. This is still our resistance. And then this kind of goes in a lot more detail if we focus on the major highs and lows. So the most extreme point will be right here. So price did form a lower high inside of the market. We still have our bearish and our bullish and our bearish candle right next to each other, and this is still a resistance point inside of the market. And then once again, we have this lowest point right here that the market has made. And look, we still have our bearish next to our bullish candle forming a support right here. And this pattern, like I said, it just repeats over and over again. And if you remember on the last time frame, all of this right here was nothing but bullish candles. But now that we're on a lower time frame, we can see that there's a lot more information presented inside of these candles. If you've ever hesitated taking a trade because you wasn't sure whether or not the trade was going to work out and you were worried about losses, then I want to invite you to my Profitable Traders Academy membership, because we will have you covered. We will help you and guide you through a solid trading strategy, so that way you know exactly where to buy and sell. And plus, you'll have direct access to me for quick and personalized answers. If you want to trade with more confidence, then go ahead and sign up at ProfitableTradersAcademy.com, so that way we can give you the help that you need. Okay, so the third thing I want you to pay attention to is marking off psychological levels. These are basically round numbers inside of the market. People tend to like really nice round numbers, and it's no different inside of the market. If we look at the sidebar here, we can see that there are some nice round numbers. So for instance, 180 is a nice round number. If we even look at 178, right about here, 178, that's a nice round number. You can see that it's 178 flat, 00 is at the end. 190 is a nice number. And if we had something like 185, that would be a nice round number. So typically when I'm looking at the market, I'm looking at either the number ending in a 5 or a 0. So for instance, 180, 185, or if I'm looking at a specific rounded values. So in this particular market, if I was looking at, let's say, $143 flat, then that would be a nice round number. If I was looking at something like $143.50, that would be a nice round number. $143.75, that would be a nice round number. So pretty much inside of the market, depending on which one you're looking at, you want to make sure that the last number ends in a 5 or a 0, because typically those are going to be nice round psychological numbers. And if you pay attention to price and what it has done in the past, you will see that sometimes price like to fall from those areas, although it may not be 100%, but it's going to be really close. And we can look at the market right here, right now. If we take a look at this high right here, it got to 199.56 or 199. And this is really, really close to 200. So like I said, it's not going to be perfect, but if you pay attention to the numbers around it, it's going to make a lot of sense. So if we look at the high that it made inside of the market, is saying that the high is $199.62. Well, what numbers are really close to that? 199.50. Really close. 199.75, really close. And if we wanted to look at it from a bigger or a larger standpoint, we could also say that $200 is really close to that as well. So if we look at this other high right here, this is really close to $196, and it looks like it's sitting right at 196.41, really close to 196.50. So you'll see these patterns on all different time frames, and this is matching up perfectly actually right here at 180, what was that, 180.25, really, really close. So just pay attention to these numbers. It's really going to help you be able to mark off your support and resistance levels. And the fourth point I want to make is using multiple time frames to make sure that your levels are as accurate as possible. So if you begin on a higher time frame, let's just go ahead and clear all this out. And the daily is a relatively higher time frame. Sometimes I use the weekly. Very rarely will I use the monthly, but you can if you want to, because it definitely provides a lot more information and the candles are typically cleaner to look at on the monthly. So when you start with a higher time frame, those higher time frames are really strong levels, and it's almost like you're compressing the time frame. So let's go back to the weekly really quick. So you can see that these candles are really, really clean. They're very solid, especially in this area right here that we were looking at. Most of these candles are all bullish, and then on the downside, most of these candles are all bearish. So it just really makes it easy for you to visualize what's happening on or inside of the market by looking at really clean candles. Now, when we go down to the daily time frame, in the same area, we do see a lot more data on the chart, and you do see a lot more of switching back and forth between a bullish, bearish, let's say bullish, bearish. So there's a lot of back and forth, but it does help you focus on the price. And this is where some traders mess up, where basically they skip the details. They skip going to those higher time frames. And when they do that, they go to lower time frames, and then they have an issue with the levels not holding. It's because you haven't started off with those higher time frames to be able to drill down into the details on lower time frames. And starting off on the higher time frames also gives you a lot more confidence, because it's a lot more time has passed in order to form that candle on that higher time frame. So when we think about it, if we think about the daily time frame, not necessarily on Apple, because the stock market is only open 6.5 hours. Let's just say, for instance, if we were looking at another market that is essentially open 24 hours. So this is the US dollar versus the Japanese yen. So this is also known as UJ. And basically this market is essentially open 24/7. Well, 24/5. And if we go to the daily time frame, let's make this a little bit nicer. We can see that we do have a lot of data, because this market is open roughly all the time, but we also need to keep in mind that for every daily candle, so this daily candle right here, there are 6 H4 candles. So let's just use this last candle right here, trying to draw just that candle alone. If we go down to the H4 time frame, we can see that there's a lot more data here. We do have 1, 2, 3, 4, 5, 6 roughly. I may have drawn that a little big, but you get the idea that in that same spot, we have a lot more candles. And then if we went down to the H2, we have 12 candles inside of that one day. And then if we go down to the H1 time frame, then it's a bit bigger. Then we have essentially 24 candles inside of that daily candle that we looked at on this time frame, on the daily time frame. So anyway, so it's just really important just to keep that in the back of your mind as you're going down from time frame to time frame. And the fifth thing I want you to know is trading around support and resistance. So in this section, we want to think about a couple of things. So we want to think about when price is hitting our support, it's basically bouncing off. And I like to use support as entry levels. And then the same for resistance. When we have price constantly hitting this area, I like to use resistance as a way for me to get out of the market if I'm buying, or if I want to sell, use it as an entry point. And another thing to help you when taking this into consideration from a risk management standpoint, you want to know that just because a price level has held in the past doesn't mean that it always will. So if we have price hitting this level and constantly bouncing off, eventually price is going to go through and continue pushing up if you're looking for an opportunity to sell at a resistance. So that's something that makes trading a little bit tricky, because if it was as simple as buy a support, sell a resistance all the time, then everybody would be billionaires, because the same thing would happen all the time, and price would basically just kind of go back and forth and not really make any movements, because it's literally just hitting the same supports and resistance. So something to think about. Sometimes price may do the exact same thing. Other times, if there's a lot of volume or maybe some sort of news catalyst or economic data release, then that could cause price to push through those once strong supports or once strong resistances. So to give you an example of what I'm talking about, if we look at this market here, we do see that there's a level of support right here. We also see other levels of support right here. Oops, let me make that nicer. A level of support right here. And then we also see a level of resistance right here. So if we look at price right here, we do see that price came down, stopped in this area, and then it bounced up, and then it formed a resistance, and then it came down and a support, and then it bounced off of the support, hit another resistance, came down into the zone, and then it continued up. So as you can see, this area right here is considered an uptrend, mainly because price bounced off of the support and continued to push up. And then right here, it formed another support and then pushed up again. So if I was looking for an entry, for me, I would feel a lot more comfortable waiting until this area was formed right here. And then, it's a little messy, and then came in, formed a support here, and then this would be the area where I would be looking for some sort of entry for a continuation. So that's typically how I trade, and for the most part, that plays out really, really nicely. So it doesn't matter if you're using the daily time frame like I am here. Depending on the way that you trade, if you're planning on holding the position for weeks or months, then this could be a good entry time frame for you. But typically when I'm entering the market, I'm looking at the hour, the 30, the 15, or sometimes the 5 minute for entry. So that way I can get a tighter stop loss and then increase my risk to reward ratio. Although I don't 100% make trades based on risk to reward, I'm usually looking at the gain in terms of pips or dollars or points, depending on which market I am trading. So to wrap this up, we talked about what support and resistance are, how to spot these levels using candles and multiple time frames, And we also learned how to trade around these support and resistance levels so that way we can have a lot more confidence when entering the trades. And if you practice these steps over and over again, you will find a lot more opportunities inside of the market that are going to be higher probability instead of randomly entering the market whenever you see some sort of pattern inside of the market. So if you're ready to learn these strategies in a lot more depth and get personalized feedback from me and also trade with confidence and the clarity that you're looking for, then join the Profitable Traders Academy at profitabletradersacademy.com, where I'm giving almost daily insights and all the resources that you need in order to be a much smarter and potentially profitable trader. I'll see you inside.